I think it's important I explain in detail how stock buybacks increases earning per share. How does uh, stock buybacks increase earning per share? Stock buybacks actually increase earning per share by reducing the number of shares outstanding. Generally speaking, this particular concept has a tendency of reducing the number of shares outstanding. If your company has, let's say, maybe a billion shares outstanding, it might decide to buy maybe 200 million shares, to buy back 200 million shares. It will now have 800 million shares outstanding instead of 1 billion. So the entire process has succeeded in reducing the overall number of shares outstanding of the company. And so earning per share is calculated by dividing company's income or profits by the number of shares outstanding. And this is how stock buybacks affect this number of shares outstanding. So in this case, you need to consider the formula for earning per shares. So earning per shares essentially is it indicates net income or the profits of the company divided by its share outstanding. You consider the company's profits and then divides that profit by the total number of shares outstanding. So let's now look at the impact of buybacks in these regards. When a company repurchases its own shares, the number of shares outstanding decreases. As I earlier explained in the analysis, let's assume the initial share outstanding was 1 billion shares outstanding, and then the company purchases, let's say, maybe 200 million shares. The company will now be left with 800 million shares outstanding instead of 1 billion. So there's that decreased number of shares, So since the net income remains the same, assuming there's no change in net income, the earning per share increase, the earning per share will certainly increase because the same earnings are now divided by a smaller number of shares. That's just how it works. The same earning, instead of being divided by a larger number of shares, is now divided by a smaller, lower number of shares. So let's take a typical example now. Before buyback, let's assume a company has a net income of let's assume $10 million and 10 million share outstanding. Or in our local time, let's say maybe 10 million naira and 10 million shares outstanding. By the time you apply this particular formula, the formula for earning per share, that's net income all over shares outstanding, you have 10 million, that's the net profit or the net income all over 10 million, that is the shares outstanding, and you have 1. 10 divided by 10 is 1. That is it. So the earning per share is going to be 1. Just 1. So now, that is before buybacks. Then now, after buyback, okay, the company buybacks, maybe let's say 1 million shares. All right, reducing the shares outstanding to 9 million instead of 10 million. So in this case, you apply the formula still. Earning per share is equal to net income all over shares outstanding. So in this case, the net income remains the same, which is $10 $10 million or 10 million naira, whichever the case may be, all over 9 instead of 10. because of the reduction in earning per share, we now have 9 million shares instead of 10 million shares. When you do the division, you're going to have 1.11 instead of 1. You have 1.11. So you could now see that there's that increase. So let's look at the result now. By reducing by cutting down the number of shares, the company's earning per share grew from $1 to $1.11, or from 1 naira to 1 naira 11 kobo, depending on your country denomination or country's currency. So in this example, even though its net income has not changed, the profit is the same. The reduction in shares means that each remaining share is entitled to a larger portion of the company's earnings. All right. And so this increase in earning per share can make the company more attractive to investors, as a higher earning per share often signal improved profitability and financial health. That would attract investors. They will buy into the shares, and as they buy into the shares in an increased number, you discover that there will be an increase in the number of an increase in share price. There will be an upward move in the share price, just by simply reducing the number of shares outstanding. So that is how it works. Please subscribe to this channel and like this video if you've not done that. It will do me a ton of good.